And welcome back. I noticed that Redfin posted a new housing market update late last week, which was last Thursday, September 1st, for the latest housing market trends in the US right now. And they're starting to notice some changes occurring in our housing market. I feel like our housing market is changing drastically on a weekly basis here because there's been such a change in our housing market over the past several months now. So with that said, I actually want to share the latest trends with you guys because there's a lot of changes going on in our housing market right now. And it says here a typical house is now selling for less than the asking price. Again, these are on a national level based on 400 plus cities that Redfin tracks here. It says the average sale to list price ratio fell below 100% for the first time since March 2021. So on average, home sellers sold their houses for less than their asking price for their most recent week, which was last week. Also, the share of houses with a price reduction came down from its all-time record high as well. That was more or less the first time I've seen this in several months now. Because that share has basically been skyrocketing ever since around April this year. Also, with mortgage rates ticking back up, expect the post-Labor Day slowdown to be even more intense than usual. And I have an update for you regarding mortgage rates because those changed drastically on Friday as well. And according to Redfin, demand from home buyers is still chilled. Home sellers are reluctant to step into this market because new listings and total inventory of houses for sale saw large declines as well. If you guys follow the channel, I've been reporting to you guys that this housing market slowdown has been more or less slowing down. In other words, this steep decrease in contracts being signed and all these other metrics here is not decreasing at rates we once saw a couple of months ago. But because mortgage rates have increased about 1 percentage point in the past 30 days, that's going to be impacting our housing market and therefore housing market trends in the months to come. Now, here's what I mean by that. The average 30-year fix, according to the Mortgage News Daily, as of today, which again is the 2nd of September, is 6.02%, which is more or less the same rate for a 5/1 ARM, for example. But at 6.02%, this is approximately 1 percentage point higher than August 1st of this year, when the average rate was only 5.05%. In addition to that, 1 year ago, average rates were only at 2.93%, so that's a difference of 3.09 percentage points in one single year. So because mortgage rates have increased about 1 percentage point in the past 30 days, it's my personal opinion that these housing market slowdown may continue to slow down further or accelerate this slowdown in the months to come. Obviously, this is drastically different than I've been reporting to you guys when rates were more or less decreasing. So rates have been decreasing more or less ever since the middle of June, all the way until we hit August. But when August hit, a lot has changed, especially ever since the middle of August, when rates increased about 75 basis points in 2 weeks. In any case, let's go back to Redfin's report here because I have a lot to share regarding home prices, housing inventory, new listings, and of course, much, much more. According to Redfin's chief economist, Daryl Fairweather, she had this to say. She basically talks about this housing market cool down appears to be tapering off, but there's signs that there's more room for this market to ease up. In other words, there's more signs that this housing market could cool off further in the weeks ahead. And she says here the post-Labor Day slowdown will likely be more intense this year than in previous years. Expect homes to linger on the market longer. In other words, houses taking longer to sell, which may lead to another uptick or a small uptick in the share of sellers reducing their asking prices. In other words, if it takes longer for houses to sell, that's going to increase housing inventory. And also, if we couple that with a lack of home buying demand, or if home buying demand decreases, of course, we're going to see less contracts being signed. And therefore, that could cause housing inventory to increase. And of course, the share of price reductions to increase as well. Of course, time will tell, and I'll definitely keep you posted regarding that. Let's talk about some leading indicators of home buying activity right now. They talk about the average mortgage rates to be about 5.66%. I talk about this in my previous videos, but this is based on Fannie Mae's weekly survey, which was conducted last week, which is based on a survey of mortgage rates back on Monday, a week ago. So current rates right now, as you can see right here, current rates are around 6% and not 5.66%. And again, Fannie Mae's survey or weekly survey is really good when we don't see a lot of volatility in mortgage rates unlike right now. Let me briefly explain, because on September 1st, which was Thursday last week, average rates increased to 6.23%, which was a 0.24 percentage point increase from the day before. But fast forward to Friday, the day after, rates dropped by 0.21 percentage points down to 6.02%. Therefore, mortgage rates were all over the place over the past couple of days. On top of that, there's no big surprises regarding this, but fewer people are searching for homes for sale on Google. Also, Redfin's home buying demand index, which of course is a measure of home tours and other home buying services, is down 16% year over year, but is up 15% from the low that we saw in June of this year. Another similar trend we're seeing right now is a lack of home tours, or a decrease of home tours by real estate agents. This is according to showingtime.com. So the orange line right here is 2022 this year. The line above that is 2021, and the line at the top here is 2020. So as of September 1st, the number of home tours by real estate agents showing houses to the real estate clients here decreased 11% compared to the first week of this year. So we have 11% decrease of home showings compared to the start of this year, which is pretty eye-opening, given the fact that January tends to be a time where our housing market is slowing down, or has slowed down during the winter months. So home showings are down 11% right now, but last year we were up 8.4% compared to the first week of 2021. And in 2020, we were up 35% compared to January 1st of 2020. What's interesting about this is that we have less home tours right now compared to the first week of January, ever since really the middle of July, which is pretty eye-opening. And also, as I report to you guys in a separate video here, total mortgage applications for home purchases were down 23% from 1 year ago. And this is according to a report that was just announced a couple days ago from the Mortgage Bankers Association, or the MBA. Okay, changing gears slightly, let's talk about the fun stuff. Here's housing market trends for home prices, housing inventory, new listings, etc. For 400 plus US metro areas. And this is for data for the 4 weeks ending August 28th of this year. So let's first talk about home prices. Here's the median sold price. So the median sold price during this time frame right here was $370,000, only up 6% year over year. Prices have declined 6% from the record high of almost $400,000 that was set during the 4 weeks ending June 19th of this year. So the median sold price is down about 6% from the all-time record highs that we saw at the end of June of this year. Also, according to Redfin here, there was only 3 areas that Redfin actually tracks here where home prices declined on a year-over-year basis. That was in Honolulu, Hawaii, where prices fell 3.6%. Oakland, California, prices fell 3%. And then San Francisco, California, prices declined by 3.7%. So one thing I want to note regarding this, and actually added a comment here, this is only true for the metro areas that Redfin tracks. Again, they only track 400 plus US metros, or 400 plus cities across the United States. They don't track every single house that's sold across the United States. So I mentioned this because I made a separate video regarding the California housing market. I actually made 2 separate videos regarding that lately. But in that video, the second video I posted, the California Association of Realtors noted that in July, 11 counties in California recorded a decrease in home prices compared to 1 year ago. So in California alone, there was 11 counties where we saw a dip in home prices from 1 year ago. However, according to Redfin here, there's only 3 cities that they track where home prices declined on a year-over-year basis. Also, according to Redfin, the median asking price increased 9% on a year-over-year basis here, but this is down 5.8% from the all-time high that we saw back in May. Here's 2 charts I want to share with you guys regarding home prices according to Redfin here. Again, the median sold price is up 5.9% on a year-over-year basis, but home prices have been declining ever since more or less June of this year. And one thing I want to note regarding this is that this trend of going down is drastically different compared to 2021 and 2020 as well. And again, as I always mention, the second half of this year, we tend to have a slowdown of our housing market. That's what's called our seasonality of our housing market. So it would be entirely normal to see home prices plateau or go down slightly in the second half of the year. But in my opinion, what we're seeing right now is that plus a big pullback in home buying demand, which is causing home prices to decline further or more so than we would normally see. And here's a chart showing asking prices in the US right now. Again, up 9% year over year, but it has been declining ever since more or less May or June of this year. Additionally, the average monthly mortgage payment on the median asking price home in the US right now at the current 5.66% rate is still up 39% from 1 year ago because the current or the average monthly mortgage payment is $2,300. 1 year ago was just under $1,700. One thing I want to mention regarding this is that, as I showed to you guys, average rates are more closely around 6% and not 5.66%. So this percentage or this increase in the average monthly mortgage payment should actually be higher than this 39% figure right here. What I mean by that, if you actually look at home prices right now and look at that compared to a 6% rate rather than a 5.66% rate, this average monthly mortgage payment would actually be higher than $2,300 per month. Okay, so let me give you an update regarding pending home sales, new listings, and of course, active listings. So pending home sales were down 18% year over year, and I'll share some graphics with you guys regarding that because we're seeing a huge pullback in contracts being signed between home buyers and home sellers. New listings are down 16% year over year, the largest decline since May 2020. Also, active listings, which of course is the number of houses listed for sale at any given point in time, on a year over year basis, the number of active listings actually rose by 4.2%. However, though, active listings have fallen almost 1% from the prior 4-week period though. Let's first have a look at contracts signed, which of course is pending home sales. Again, down 18% year over year, and the number of pendings has been more or less declining ever since the middle of May, right here. And also going back to March and April this year, we more or less had the same number of pending home sales compared to 2021. So over the past 5 months, we've had less contracts being signed between a home buyer and a home seller. Of course, that's a pending home sale compared to 2021. What we're also seeing right now is a huge pullback in the number of people listing their house for sale. So new listings are down 16% year over year and have been decreasing greatly ever since the middle of June of this year. And this pullback from home sellers is one main reason why we're not seeing this growth rate of active listings. So housing supply has been increasing or still above 2021's levels, but the trajectory we had back in April all the way until we hit July was more or less going straight up here. Then in July, the growth rate of active listings started to slow down here. But over the past few months, or past few weeks, I should say, the number of active listings have been coming down. And as I mentioned in previous videos, the reason behind this slowdown of active listings is really due to a pullback in home sellers listing their house for sale. In other words, we're seeing a decrease of new listings, which is causing this softening of the growth rate of active listings. And by the way, if I had to guess, I would imagine at the second half this year, because mortgage rates are around 6% and also because of our seasonality or housing market, I wouldn't be too surprised if the number of new listings continue to decrease through the remainder of the year. And this could cause the growth rate of active listings to slow down further here. However, though, because mortgage rates have increased from about 5% now to 6% in a very short period of time, 30 days, this is going to cause home buying demand to decrease, in my personal opinion. I would not be surprised if pending home sales decrease further in the months to come, and even more so and also more pronounced than we would see during this time of the year. So if I had to guess, if mortgage rates hover around 6%, this is going to cause a pullback in home buying demand and therefore a dip in pending home sales. If that happens, less contracts are being signed between home buyers and home sellers, and that should increase housing inventory. However, though, as I mentioned in my video from a couple of days ago, the wild card is the number of new listings. If the number of new listings continue to crater, that's going to cause downward pressure of active listing inventory. Of course, time will tell. I'll definitely keep you posted regarding that because it's a very dynamic and ever-changing market, more or less on a weekly basis here. Redfin also noted that approximately 36% of pending home sales went under contract within the first 2 weeks of hitting the market. And this is below average compared to the past couple of years here because back in 2021 and 2020, that ratio or that share was approximately 40%. Additionally, 24% of pendings went under contract within 1 week. In other words, houses sold very, very quickly, 25% of the time. In stark contrast, though, approximately 76% of pending home sales went under contract after 1 week. Also, the share at 24.1% is below the levels we saw of 30% over the past couple of years. Another interesting trend we're seeing right now is that it's taking longer for houses to sell compared to last year. So right now, the median days on the market is 26 days, which is above last year's levels right here, because last year it took approximately 20 days to sell a house. Now it's 26 days. And here's another trend we're seeing right now that's drastically different from the past couple of years now. So the share of houses selling above their asking price is sitting at 36.8%, which, by the way, 1 year ago, that share was 50%. So in 1 year, we went from 50% down to 37% for the share of houses selling above the asking price. And for the first time since approximately March of this year, the share of price reductions actually decreased this week. So the share price drops right now by week is 7.5%. This is down slightly from last week when the share was 7.7%. And what's interesting about this is that the share of price drops has been more or less plateauing ever since the middle of July, which of course is drastically different when we look at April through July when it was basically skyrocketing. So what a difference here. So this plateauing effect of price drops, as I talk about in other videos here, is due to the fact that we're seeing some stagnation of active listing inventory. In other words, we're not seeing the gains of housing supply like we once did a few months ago. So because of this, we're seeing fewer houses listed for sale and also a pullback of active listing inventory. This is causing the plateauing effect of price drops. But again, because mortgage rates have increased so much in the past 30 days, I would not be surprised at all if next week or the week after, if this share continues to increase. But because mortgage rates have increased so much, from about 5% to 6% in 30 days, I would not be surprised at all to see that this share of price drops starts to increase once again. Another interesting trend we're seeing right now is that home sellers actually sold their houses for slightly less than their asking price during this time frame. So the ratio is 99.8%. That means that home sellers sold their houses for 0.2% less than their asking price. Obviously, that's not a big number here, but drastically different compared to the past couple of years, though, because back in April and May of this year, the ratio was at 102.5%. So on average, selling their houses for about 2.5% over their asking price. Now it's slightly below that number. Also, when looking at this graphic here, the ratio of below 100%, we haven't seen that since March 2021. So comment below with your biggest takeaways from today's video. Also, if you guys got any value at today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.